So going on, guys, welcome to another video of the Common Investor. Today we're going to be going through Eric's portfolio. Has switched up slightly since I'm not sure the last time you talked about your portfolio, but really it's just two stocks that he has right now, Cisco and Carrier. So we'll kind of just get into that, and we'll start out with Cisco, and I'll let Eric take it from here.
Yeah, so when we were first looking at the first dip, I was looking a lot at restaurants and that recovery. Then I started thinking about the food supplier, and I mean obviously the biggest name when you think of food supplier is Cisco. So you didn't really see a lot of restaurants pretty much close. We had a lot of delivery in New York, and a lot of people actually took advantage of that. But I honestly love Cisco's chart, their 5-year chart. They've been growing pretty consistently for the past 5 years. Let's see. Can I get there? Oh man, I gotta type in again.
A nice one. I like that chart already.
Oh, just wait until you see the financials. You'll really like it. So on top of growing consistently, if you look at, I gotta make this bigger. If you look at 2016 to 2019, I mean, you can look at the trailing 12 month if you want to, but you can see that the revenue has been growing pretty drastically every year. Cost of the revenue is going up a little bit. I don't think it's too concerning. Growth because gross profits growing up.
Yeah.
Also, operating expenses is going up. My guess is, well, not really guess. I mean, you can just pretty much say that that's because they're expanding. So over the past 5 years, really good trends that way. And then you look at, where is it? Where's just basic net income?
All right. Oh, not net income accounts there.
Should be at the bottom, right?
Net interest income. Oh, yeah.
Oh, I forgot. It was literally just here. Okay, well, anyways, it drastically went up. Their net income drastically went up. Just like you can see their basic EPS also been increasing over the past 5 years. I mean, and you're getting them, if we want to go back to the chart, you're getting them at like 2018 price right now. Probably, I think lower.
2017 price.
2017 price. They've been
Yeah.
growing drastically.
Yahoo
So-
Finance put in a coronavirus tab. I didn't even notice that.
Yeah, I don't, I don't know. But
It looks like they just upped their dividend too. I'm looking
yeah,
at
they just announced a dividend, and the
was-
main,
substantial, like
yeah.
pretty big change.
So I mean, let's scroll down here again. 2000.
It looks like they've always paid a dividend too, which is nice.
And
Yeah,
then
and they've maintained it. I mean, you're getting this at 2017 price on a company that's been growing every single year for 5 years, increasing dividend, and a company that's had a lot of insider buying recently. A lot of the high management positions bought a lot of stock last week.
10 million worth.
Yeah, they bought a lot. So, I mean, you're getting this at 2017 price, growing 5 years. Cisco, I mean, how many Cisco trucks you see on the road delivering food to restaurants?
All of them.
I think you give this 6 months. You give this 6 months, and I think you're going to see it right back at its numbers, probably new highs. And not only do I think it's a very good value, pretty good value right now, I think there's actually growth potential as we see a lot of people kind of going away from staying at home and cooking and eating, and a lot more people going towards a lot more young people going towards eating out at restaurants more frequently.
Yeah.
So I definitely see growth potential here. I mean, Cisco is the biggest one in the country. I really see nothing wrong with this stock. I mean, you've got insider confidence, you've got growth, and you've got, I mean, just an absolute juggernaut of a company.
Yeah, I definitely like what you said there about like younger people not going out, or going out a lot and not cooking their own food, because I can definitely see that trend. People our age are.
this is one that like I really wish that I had like thought about, when
Well,
everything.
there's a lot when they divested the two Otis and Carrier. Carrier was seen as very, very undervalued by most of the people in their
I think
industry.
you're still talking about Cisco.
Yeah.
I
I
was
switched to Carrier. Yeah.
Well, like the thing is
you can go off.
Carrier was valued at like $13 a share or something like that.
I think it
point.
went off at like 17 and dropped down to 12.50, somewhere around there.
Well, I mean, like compared to their competitors, they were like the cheapest company in their sector.
They were not only the cheapest, they were the best value.
Like it was, they're definitely very under. They were definitely.
If you looked at PE ratio, they were the best value, and it's kind of interesting that they're the best value considering that they're either first or second in the world, not the country, in the world at every single sector that they work in. I think they can grow a lot, especially being kind of they're away from United now. And you know, I've talked a lot about Raytheon and how bullish I was on Raytheon. And here's the thing: I don't really invest in a lot of different companies at once. I like to pick stocks that I think are going to outperform every other stock in the industry. And right now, I'm kind of in Carrier and Cisco because I think they're just absolute juggernauts of companies that will make it through pretty much anything, even if we kind of see a smaller recession or another pullback in the fall.
What
and-
is Carrier? I'm not like too familiar with them. Like, what do they do? Like, what's their industry?
HVAC systems.
Gotcha.
Heating and
So, like,
cooling, right?
Yeah, heating and cooling, like refrigerated trucks. I mean, maybe Cisco uses a little bit of Carrier.
As much as I like the opportunity with Carrier, I guess I'm kind of biased against them because they moved out of our hometown.
Yeah, well, here's the thing: they moved out of upstate New York, and I was also pretty interested in Xerox. If you've watched past videos, and they also have made their way out of upstate New York.
It's like there's a pattern.
Yeah,
Well,
yeah.
honestly, that might be the best financial decision for them.
Yeah, I mean, especially in New York, you see the insane tax. I mean, it's not really the best. It's not really the best place for business. I mean, you see some other companies that are trying to move out of New York now from upstate.
If they're like a moat, or it gives them some sort of incentive to be here, like Amazon.
Yep. Yeah, but what I honestly see is I see a company that's the cheapest in its sector for the top two performing in every single sector that it's in worldwide. I see a lot of investment potential for Carrier now that they've broken off by themselves to kind of become a lot bigger than they were able to become under United Technologies. I think you might see a lot of spending coming soon to increase their prevalence in the industry and see where it goes from there. It's just I guess I'm a big industry guy.
Yeah, definitely. I definitely like your two picks, Carrier and Cisco, and I definitely see your ideas of how they're gonna outperform the market. Definitely been trending up too. Carrier's been trending up in the past 5 years, I'm assuming, right?
Well, it was part of United, so you can't really.
It's hard to gauge it.
Yeah, it's hard to gauge. I mean,
but United,
you can kind of. I mean, kind of just look at this. You can look at United Technologies
and that's been
financial reports and see broken down by their entities.
Yeah.
But I didn't prepare that for this video.
Yeah. But you definitely have the Carrier is top of the line in their discipline, and then Cisco's like top of the line.
I mean, Cisco's got like one other major competitor, and I'm telling you right now, I've heard a lot more about Cisco and seeing their growth pattern, and then seeing. I mean,
what's Cisco's competitor?
U.S. Food, right, Chris?
Yeah, their biggest competitor is U.S. Food.
Yeah, and I've never I've heard of Cisco.
Never heard of it, right? You never really heard it.
You never really hear U.S. Food, but you hear about Cisco.
I was looking before I invested in them today. I was looking at like the different amount of distribution centers. It basically gives a scope of the size of the business, and I think Cisco had the most, but I think U.S. Food was only behind them by like maybe 5 distribution centers. But then the rest of the competition is like the next highest is like 75 distribution centers less than what Cisco is. So essentially, especially, I mean, I work in like sort of the food industry, and I mean, most of my places of business that I go to are serviced by Cisco.
And you have to make sure that they are serviced by an actual licensed supplier. They can't just use
like
fish
a
that
lot
were
of people
caught
are
in the
looking
sea.
directly at the restaurants during this coronavirus, and no one really mentions the suppliers. They're kind of like the bread and butter of the food industry.
And that's what I found. That's what I found interesting. Is I was looking at Darden for Olive Garden. I was looking at Yum Brands for KFC and Taco Bell. I was looking at who I thought had the best financials for growth in the food. But what I just started thinking about is who supplies all of them.
Yeah, it's because the supplier is like the less attractive side of the whole process. People talking about the actual restaurants and stuff.
It's the behind the scenes that not really many people think about. And honestly, when I came across it a couple of days ago and started doing all my research in Cisco, and I was like, how have I not thought of this problem?
And it's the most important part of it.
Yeah, if those companies don't get
you gotta look at, like, I mean, by law, these businesses are required to obtain their food from
licensed suppliers.
Sources, which is essentially USDA inspected food, and most of these places are serviced by a huge commercial USDA factory, like USDA inspected factories, and Cisco happens to be the largest one in the world, in the country.
I mean, you're getting mid 16 to mid 17 numbers on a company that's been growing for 5 years.
Yeah.
And has been not only growing but increasing their net income as well, and hardly increasing their operating costs. I mean,
yeah, I don't know what the reason why anybody would be so bearish on this, because like even if one restaurant that they're serving fails or something, like it's not really gonna affect them. Or
you don't. That's what I like, is you don't have to pick.
There's always gonna be restaurants to supply.
Yeah.
Essentially.
Even if one restaurant fails, restaurants can pop up and start using Cisco.
You see small mom and pops close, and another one moves right into their place within a month.
The thing is that
changes up the decorations and uses the same supplier.
I feel like a lot of what Cisco's business is in commercial food. Commercial
it is.
food businesses, and I mean they're less affected if mom and pop closes because commercial.
I'm just talking about the general restaurant industry. Is that there's always going to be restaurants. You're not going to worry about
people eat food.
And the demand for restaurant food is always going to be like the same. If people aren't getting it from one restaurant, they'll go to the other, which is still serviced by Cisco.
I think
exactly.
If
I don't got to worry about Olive Garden when
you had to choose between the travel industry and the food industry to make a quicker recovery. I would bag on the food industry all day long.
Oh yeah, because it's easier to socially distant or something in a restaurant than it is when you're traveling.
If there's something that us as investors, if there's something that us as millennial / Gen Z, whatever you want to consider us as investors, understand, it's the behavior of people our age group towards food. And there is a very strong pull towards eating out every single day.
I want to go eat some chicken tenders with the boys.
I want my takeout containers. I don't want to go grilled chicken. I want an $8 takeout container that's ready for me when I walk by the restaurant on my way back from work. I mean, especially big cities.
Yeah, it's definitely trending that way.
Yeah, and a lot of people, I think, were looking nearsighted when you saw Blue Apron shoot up from $2 to $18 during beginning of April. Everyone's everyone's going to start getting this stuff delivered to them, and they're just going to cook. Do you realize how expensive that stuff is? I can go get a takeaway container for the same price.
Definitely, I looked into those things because, of course, I'm lazy as frick, being living by myself, and I was like, yeah, it'd be really nice to come home to meals every day, but at the same time, the cost of it is
the cost while having to prepare it when I can just order something ahead for $8.
And if you're gonna get Blue Apron, that's kind of just the same thing as going to a grocery store. So you can kind of easily just substitute it out for going to a grocery store.
Yeah.
You can get pre-made meals at the grocery store if you're really desperate.
Whereas eating out is just a whole different.
It's a whole different experience. I mean, nobody. The thing is, I don't think the thing that people take into consideration with Blue Apron is when people invested in that is they think people aren't going to go to restaurants anymore. You're forgetting the whole reason why people go to restaurants.
They don't want to cook.
It's not because we like the food.
It's
It's
the
not
social
because it's
aspect.
better. It's not because it's great for our guts. It's not because it makes us slim. It's
Well,
not
like,
because of any of those reasons. It's because we are lazy. We are
Yeah.
a lazy population
we
that
get
wants something now.
available food right in front of us, and then there's a social aspect to it.
Yep.
I mean, like being able to go get food with your friends. I mean, maybe it takes a toll right now during Corona, but the COVID-19. But like at the end of the day, humans crave interaction with other humans.
And they do that most commonly over food and drink. And the supplier behind it all is this bad boy right here, Cisco.
Bam, end of video, 2 stocks.
One last question I did have, as far as like the impact of Cisco and like COVID, like how big of an impact do you think, Cisco's taking, because everything's shut down, that's gotta hurt.
But here's the thing is no big commercial restaurants. Again, you can talk about the political bias behind this for days. No big restaurants were really forced to shut down.
I think there's less supply that they're giving out, like less orders of food.
Right. Yeah, that's what I mean. I mean, like they're producing less food for sure.
Like,
Yeah.
They're distributing less food, but
That's short term problem.
In the short term, but I mean, they're still generating revenue.
Yeah.
It's not like they completely closed their doors.
And that's going to be a short term problem.
You have to think about where Cisco delivers food as well. Like, they're not just delivering to restaurants; they're delivering to nursing homes.
And another
thing, delivering to people that are required meals every single day. There's
Hospitals.
there's no stopping of the supply of food.
Yeah. And a lot of things you don't think of is the shelf life of food for a supplier is a lot longer than the shelf life of food for a restaurant. So a lot of these suppliers were buying back the supply that the restaurants were now oversupplied for. And they can manage that a lot better than
even the
restaurants. So I mean, they still have the product.
I'm not sure how their distribution centers are affected by COVID, considering like social distancing and stuff. You've seen a lot in the meat industry with issues in that case, but the actual like deliveries are all by truck, single person operating out of a 18-wheeler truck.
Now think about this, Luke. Think about this.
I like them. I want to invest in these guys. Like, I probably will.
Did I convince you to finally invest in something that I picked? It's been so long.
This is perfect. Like, I want this. I want this, and I want this long term. I mean, 5-year growth. Oh yeah, like
growing industry. I mean, I love it. I love it.
Hold this like for a long time, and they got a nice dividend on them, and they're growing it. And
yep. I mean, it's like 3.8% yearly.
There's always a downside with every stock you pick. I mean, but that's always in their what do you call it? The
10K.
The 10K. I mean, if you might see some short-term decrease in the amount of suppliers that they supply, but I think in the long term, it's like anything, the food industry is going to recover, and they're the ones.
I think it's going to return to 2019 levels in no time. I mean, planes not going to return to 2019 levels in 3 to 5 years. Manufacturing for planes, cruising, not going to return to 2019 levels for 3 to 5 years. Something that is really hurt right now that is going to recover a lot faster than those, which I think is now the best opportunity to put my money into, is food. And a lot of the restaurants have already recovered past levels that I'm comfortable paying for. So the supplier seemed like no question.
Yeah, I mean, a lot of those big commercial food suppliers, they went up real fast from they were at Darden was at a low of $40 at one point.
I think it was lower than that.
Yeah, now it's all the way up.
Let me see. I think it was at 28 at one point. I could be wrong.
It shot up real fast.
It's like 78 now. I think its low was like $30. Give me the 6 month here.
Why did they shoot up so much today?
Like Darden. See, March 18th. I mean, let's try to do. Can you do a 2 month? I wish we could do a 2 month because it goes more in depth. But I mean,
as soon as
you see, I'm pretty sure it hit like 30s. And as soon as
they announced the phase openings, the restaurant industry has shot up super fast.
And my question is, are you bullish enough that you will pay $78 as opposed to you being able to get it at $34, are you bullish enough on an Olive
I
Garden?
mean, it was
Yeah.
was like $100 something.
Just
Yeah.
one
It's still
specific
not a bad
restaurant.
pick.
Yeah, but are you bullish enough on that? Do
Like,
you
let's
think
look
that
at
there's
their max. Let's look at their max. I mean, they have some good. Like, they've had excellent growth over since '95.
okay, but Darden is a bad example because if there was a restaurant that I invested in, it was going to be Darden. But I was too late on
Look at
it.
Cracker
I
Barrel.
wouldn't pay $78 for it. Not right now, definitely not. I think it's
Look up Cracker
especially
Barrel.
considering I think they're a little bit less pullback proof.
All right, let's look up Cracker Barrel and then we'll wrap it up there. After.
That banger's already back to $108.
Wasn't that at 50?
Yeah, I'm telling you, these restaurants are cracked out of their minds. For what?
I think it was at 50. Yep.
Yeah.
56.
Yeah, as soon as they announced, they shot up like.
Well, it was that March 23rd low. It was lower than this, but it's not showing me.
Yeah, I'm pretty sure it was at 50, to be honest.
Yeah. Wait, March 23rd was the low of the market, and it's saying it was at $80. I don't believe that for 1 second. I don't even remember what came out around that time because there was no like successful trials of any sort. And
All
it
right.
shot up from 50 to 80. But yeah, I mean, anyways, Carrier 1 and 2 in their fields. Cisco supplying to a growing industry. Boom.
Might be averaging into Cisco. I really hope they go down tomorrow because I don't want them to go up again. So I pay more of a premium.
Please
Get them while you can.
don't bet against me.
I'll probably just like average in. I'll just buy on the down days and just because I love Cisco now. I am.
Listen, you want to know what's funny? Is I started this whole COVID-19 shenanigans by saying I wanted to invest in Cisco, but the other Cisco, CISCO.
Oh, yeah, that's right.
And I'm full circle. Look at us here. I mean,
pull that video up and
I think the other Cisco would have been a nice value play. But
it's up like $6.
I like this Cisco better, to be honest.
Cisco, I'm all in on this one. I love it.
All right. Well, it sounds like a wrap.
All right. Let's end it.
Well, we'll end it there. Let us know what you think of Cisco. Also Carrier. We barely talked about Carrier, but that's okay.
It's because we all love food.
Cisco is the play.
I guess Cisco is the better play. No,
So-
they're good.
Below. Don't forget to like, comment, subscribe. Check out our previous videos. You can kind of follow the journey along with us. And we'll catch you in the next video. Thanks, guys.